Is that a good way to diversify then?
It is, because it's not tied to the market.
This is a chart of the US dollar's relative strength compared to other major currencies, okay, like the euro, the pound, these types of things. This is a longer term multi-year chart, but I've drawn a line across the bottom there where we are right now. We're at a strategic, pivotal moment in the dollar right now at around 100. Okay, at the present time, we're at 100 on the relative strength index for the dollar. But let's look at the far right side of this chart. You see that straight line down? That's all in the last week, Josh.
Yep.
This is a move that's unprecedented to the downside. This is not good. This is not good for the US dollar. We've gone from roughly 104 to 99 in the US dollar index in about 1 week. So that's a 5% drop in the overall strength and purchasing power of the US dollar in a week. Normally, it would take us months to see this kind of decline. But with trade policies, various things that are happening in the bond market, what we're seeing right now is a flight to other currencies. The euro in particular is strengthening, but we are at a line in the sand when it comes to the dollar. This area has been tested before, but look at that line. You can see it's always gotten to the 100 level and it's just bounced, right? It's bounced up. 100 kind of seems to be a little bit of a floor, but I actually think we're falling through that floor right now, Josh. And this just does not look good for the US dollar for the short, medium, and long term, frankly. On this next slide, I just have a little bit of a projection here as to where I think we're going. The size of the breakdown that we saw last week is something that I think we're going to probably see again here in the coming weeks. We're in a pennant right now, that triangular formation. We're kind of hovering around that 99 to 100 level on the Dixie. Once that floor, that line that I've drawn, breaks down, we're probably going to see another 5-6% drop down into the 94, 95 range on the Dixie, which just means, you're losing money if you're holding dollars. Now, we'll get into the stock market in a little bit. You're very familiar with how the stock market's performed for the year. Just generally speaking, depending on what you own, you're down anywhere between 15 and 20%. But a lot of our clients, both new and existing, are actually holding on to quite a bit of cash, right? They might want some more metal. They're unsure. They are out of the stock market. They don't know what to do. A lot of clients right now calling us that are new prospective clients are saying, I'm holding all these money markets. I'm holding on to dollars. Sure, look, that's better than being in a market that's dropping. But you cannot ignore the fact that the dollar itself is a risk. Holding the dollar is a risk over the long term as well. One stat that I like to share with clients is with the rate of inflation right now, Josh, we're seeing a decline of about 8 to 10% a year in terms of your total purchasing power. Okay, and a thing I like to highlight to clients is that the half-life of the dollar right now is every 6 years. What that means is 100 grand in cash today will buy you about 50 grand worth of goods in 6 years. Another 6 years after that, it buys you 25 grand worth. Another 6 years after that, 12,500. Okay, holding on to cash for the long term in light of this setup in the dollar relative strength index is not something you want to do for longer than you need to just figure out what the next move is. Okay, so we need to be very cautious with cash. And just any take on that? I know you're very familiar with this stuff too, but do you have anything to add to that?
Yeah, something, just that's remarkable to me is just in the first quarter of 2025, we've seen depending on what metric you look at or what market you look at, we've seen a 10 to 20% decline in the stock market. In the same time, we've seen about a 25-30% increase in gold. So priced in real money, we have a 50% swing from the stock market to physical gold. And this is, I can't remember there being a quarter where we saw this big of a turnaround. I think it's unprecedented. I read an article the other day where we have, gold had the best quarter. The Q1 of 2025 was the best quarter gold's had in 40 years.
Wow.
And that's really just telling, right? It's flashing signals to the market, to the economy, to the world of what's really going on here. We always got to watch gold. Gold is kind of the canary in the coal mine, I like to call it.
Absolutely. And you're right. In 40 years, the last time it did this well was back in the late 70s, early 80s.
Yes.
And, from 1974 to 1980, Josh, gold went from like $42 an ounce to $800 an ounce.
That's correct. Yeah.
That was the last time that we experienced something that's called stagflation as well, right? It's where you have a contracting economy, but the price of everything continues to rise. So the things that you need, from gas to food to shelter, those things are going up, but jobs are slowing down, the economy is producing less. And when you have that type of combination, which is quite frankly very rare, like we haven't had a stagflationary macroeconomic setup since the 70s, we're now in that same type of macro backdrop. So, gold went from 40 to 800 in 6 years. Okay, from 78 to 80, from 1978 to 1980, it went from $100 to $800. It was like an 8-fold move. So
In a few years.
A couple of years. So for us to go up, 20% in 3 months, again, is telling. It's a canary in the coal mine. It's telling you there is something that is structurally and fundamentally wrong with the global economy, the global financial system, and we're going to get into that a little bit more.
Why did I invest in gold? That's a no-brainer. I work hard for my family, my children's future, my retirement. That's what it's all about. But I could lose everything overnight. The bubble burst, Black Monday, COVID, we've seen it happen way too many times. And gold is the only asset that survived all of those disasters. So the question isn't, should we invest in gold? The question is, who do we invest with? Now, trust me, I called about 20 different gold companies. Noble Gold Investments not only answered all of my questions objectively and patiently, but they were the only gold company to offer information to help me make better decisions. I invested just the minimum amount to start. I just wanted to feel them out a little bit, but Noble Gold Investments went out of their way to make me feel like a multi-million-dollar investor. The paperwork took less than 5 minutes. I get regular updates, and they're still answering my phone calls. Nowadays, it is so hard to find a US-based company like Noble Gold Investments. So if you want my advice, here it is. Don't just invest in gold, invest with Noble Gold.
For your free Noble Gold Investments guide, visit noblegoldinfo.com.
And got the info on how to invest. Making sure your choices are always the best. From bullion to coins, they'll put you to the test. With knowledge and guidance, you'll be impressed. Give me the gold, the glitter, the shine. Building up my fortune 1 ounce at a time. Future secure as a sparkle incline. Give me the gold.com. Everything's fine.
Get a precious metals IRA guide from Noble Gold Investments now by going to noblegoldinfo.com.